All right, guys and gals, it's about that time of day again here, folks. It is that time of day, back in the action once again. Hope y'all had a great weekend. Hope you guys got some rest because we got a busy week ahead of us. It's Monday evening. It is April 29th, almost finished up the month of April. We got one more day to go. My name is Joseph, and of course, this is your nightly newsletter. Now, don't forget, guys, I help traders of all shapes and sizes, new traders, experienced traders, all kinds of traders I work with every day in our trade room. And I help traders find predictable, dependable, reliable, profitable trading opportunities using a simple 3-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is to identify the best setups, the best levels, the best patterns, the best situations we're looking for tomorrow morning's trading session. And tonight we're going to cover oil, going to cover S&P, we'll grab some Nasdaq, we'll grab some gold, and we'll finish up tonight on that mighty euro. I'm going to jump in here first this evening on the black gold, the Texas T, the crude oil futures, because if you're just getting to your charts right now, oil looks ready to go back to 75, doesn't it? But look closely and you'll see one very, very important clue. Let's jump into that chart first tonight, right on this oil, because if you're not looking at this chart correctly, it's easy to think this market is ready to explode, right, going higher. Now you'll notice on the chart here today, we started off inside this real tiny range. In fact, this morning, this range only 14 ticks wide. Woo! That's a very narrow range. Now, narrow ranges are a big clue, and we're going to talk a lot more about why this narrow range is, I don't want to say a very difficult scenario, but it requires you to trade a little bit differently. And one of the things that we always expect to see in narrow ranges is we expect to see significant attempts for breakouts. And so we know we have a range-bound market, but we can also see this market is really trying to push higher, right? They've got one leg, they've got two legs. But as you can see, if you follow this newsletter, you know, right? We take those ranges, we create our expansions, and we are right up around some key levels of resistance. So I'm anticipating that a lot of traders are looking at this as a trending market. They're seeing this as a bullish trend. But in my eyes, I've got this as a range. And we'll dig into this a lot more detail tonight on the video, but I'm looking for a sell, right? I'm looking for a sell going back down into that trading range. And I've got a couple key patterns I'm going to be looking for. At the same time, right, I'd be lying to you if I said the buyers didn't have a great shot to break out. And if they do, I've got two patterns I'm watching for if we do get that successful breakout. So I'll cover the sell side and the buy side for you guys on the oil, but I'll tell you right now, there's a trap up there waiting to happen for those buyers. We'll talk about that more in detail tonight on the video. Over on the S&P tonight, boy, oh boy, they continued this big move on the S&P today. Remember, this was last Friday's GDP report, right? Remember that? What was that? 3.2%? Holy Christmas, right? It's a very strong number. And you can see, of course, right, these buyers, right? These buyers continued that move going higher. Now, I've got a couple different chart patterns on here, right? One would be a spike into a channel. Spike in channels give us very specific levels to watch for. We'll dig into that later on tonight. And then, of course, also, too, this kind of looks like one of those Elliott wave, right, kind of 1, 2, 3, which means I'm thinking now we're setting into the fourth wave here for a fifth wave going higher. Bottom line is, take those two highs down to those lows, right? There's your hidden channel off of those lows. So I've got two levels right now, right? Two patterns or two structures, whatever you want to call it. I got my spiking channel, right? And I've got my hidden channel right now, all telling me right now to look for some buying opportunities down inside this battle zone. Yeah, you're right. Even got that reversal line, right, coming over as well. The only problem we have is we have a very strong bear move going lower. And so anytime we see a strong pull back, we always expect to see a couple key components here. I want to be a buyer on this, But because of this strong move lower, I'm expecting the bears to at least try to send this market going lower. So I have to wait for that, and then we'll put the plan together going back up to retest the high. I've got two different buy patterns here. I'm also looking for a failure, basically, right? A continuation there. We'll look for one very easy sell setup for that pattern, of course, and we'll talk about targets for the upside and the downside here. Very good chart setting up here on the Emini. Nasdaq also has a little bit of a case of the sniffles here, right, as we go in. Now, the Nasdaq has a little bit of an excuse. They've got the earnings reports, right, coming out here right now. I think it was Google that just reported that sent this thing out here. Like I mentioned last week, we are still battling through earnings season right now. We'll talk about earnings in just a moment here for you. But I think it's pretty easy to see, right? Nice strong bull move up. Again, we had that big 3.2 GDP print. And you'll notice, right, they go up, they pull back, we get a new high. I'm connecting those highs and obviously calling this a spike in channel. Now, again, spike in channels tell us a very specific area we want to be buying, right? So we're right down in that area right now. I also wouldn't argue with you if you said, no. This is a range, right? Double tops, double bottoms, right? Pendulum swing. We're ready to go right back up again, right? So we want to be buying below that range, big move up into that trading range. I want to buy down here, but much like the S&P, that is one hell of a move lower, right? No joking around on that move. That much strength tells me we're going to probably see another leg lower here for these sellers, which means I need to get a little bit more information. I'm going to talk about three different scenarios to watch for, right? For this market, either go up or to finish off this move back down to retest those lows. So right now, we're pulling back in the perfect spot to be a buyer, but we don't have a quite a grip on the buy side yet. We're going to talk about what that grip will look like in just a few moments on the Nasdaq. And then, of course, over here on the gold. Gold is bearish tonight. Nice, big, strong move down. Got a couple things I'm watching right now here on the gold. All right, anytime I see a strong move in one direction, I'm expecting to see a pop up, selling high, right, and back down we go. Now, I've got a hidden channel on here, right? I've got my range on here. So this whole area up here is really attractive for sellers to begin with because of the top of the range, right? Because, of course, it's that hidden channel. And then on top of that, I got this little smaller range here. And, of course, 1, 2, that's also giving us some spots there as well. So I'm looking to sell off of that high. Now, obviously, I'm not just going to sell off of that high. There are two patterns I'm watching for as we go up. I'm also going to keep my eyes open for a reversal and what a reversal would look like when it's safe to trade a reversal. And then don't forget, right, that big pendulum swing will take us lower here. In this whole area down here now, we might get a chance here to buy it right back up. So we'll talk about the sell side. We'll talk about the buy side as we dig into the yellow metal here tonight. And then, of course, over on the euro is, dare I say it, it is a little bit bullish right now. But don't go holding your breath too long on that because, well, not only did Goldman Sachs issued a whole euro report this morning that talked about euro going back to the 11,000 number, right? So we're still a little bit further away from that. So we're getting a lot of headwinds from the big investment banks right now. It's the dollar, right? The dollar is very strong right now, and that's causing that euro to keep pushing lower. But don't tell that to the bulls right now. The bulls are basically rotating off of that low, if you recall from last week. Strong move down. We shot underneath that range. The amount moved lower. We got our key level of resistance overhead. It's a range, right? And much like on oil, we don't want to confuse this to being a bull market, right? It's bull momentum, but we know that with this level of resistance, we'll talk more about this tonight on the video, I'm looking for a sell back down right into that trading range. So I'm waiting for a pattern, and we'll talk about what that pattern looks like here, right, on this euro. And of course, we have everything ready to go here. Euro, gold, Nasdaq, S&P, and oil. We're going to break this entire strategy down for tomorrow. That way we're ready for tomorrow morning's trading session. But before we jump into charts tonight, I want to make sure you never miss a video. In fact, I want to make sure you're always the first person to know when this nightly newsletter goes live. And to make sure you never miss a newsletter, join our mailing list. All I need is your name, your email address, and then hit that subscribe now button. Now, when you subscribe to our mailing list, make sure you check your inbox because I'm going to send you a welcome email with a bunch of goodies so we can get the most out of our time together. Now, also, check your spam folder. A lot of times these emails will get stuck in your spam folder when you join our mailing list. If you don't see the invite in your inbox, check your spam, check your promotions folder in Gmail. And that goes for all my emails. Sometimes my emails get stuck in those spam folders, so make sure you're checking those spam folders regularly when you're working with us for some reason, talking about opportunities and trades, stuff like that. It oftentimes gets stuck in spam. So grab those, right? Join our mailing list. That way you never miss another great video. And then one last thing too, I'm always looking for feedback. Guys, I want to make this the best place to learn and earn on YouTube. And to do that, I need you guys to give me your feedback. What's your favorite market? What market do you wish I would remove from this newsletter? What is some analysis that you wish I would do, right? How else can I make this newsletter better? What would you like to see me remove from the newsletter, right, to make it better as well? I would love to know how you use it, what your favorite market is, right? Give me some feedback in the comment section. I will be forever grateful because I'm always trying to make this the best place to learn and earn. And while you're down there in the comment section here on YouTube, give me a thumbs up on the video tonight. If you tune in every evening and you love this nightly newsletter, it would mean the world to me and go a long way to help us get out to more traders by posting me a comment and giving me a thumbs up right on that YouTube video. And don't forget, if you have any further questions or maybe you want to pick up the phone and call and say hi, talk about charts, data, brokers, strategy, free trial, whatever you want to talk about, grab that toll-free phone number. Use that live support tool in the upper right-hand corner. I know most websites are chat bots and automated robots and call centers. I'm old school. Right? Somebody calls that phone number, I pick up the phone, right? It's my wife and I. We run a small business here in Los Angeles. We take a lot of pride in the fact that we're a family-run business. We don't use all the chat bots, the call centers that most websites use. And to do that, right, that allows us to get a much better resource and much more service for our clients. So don't be afraid to pick up the phone, right? You're not going to be calling anywhere else besides our office, right? So call that toll-free phone number, and I'm super excited to answer all your questions. In the meantime, though, let's get back to work because I really appreciate your time. I know you got so much good stuff, right, to be watching right now. So let's dive right in. Let's get the plan together, and then we'll grab those charts here, and we'll get the charts put together for tomorrow. That's Tuesday's session. Now, tomorrow, Tuesday, April the 30th. Tomorrow is the last day of the fourth month of the year, last day of the month. Now, what do we always expect to see as we go into the end of the month? The end of the month means lower volume, it means more risk taking, and it means more volatility, right? Lower volume. A lot of traders don't trade into the end of the month. Right? Why? Because they don't want to give back money they've made. Remember, a lot of traders who trade for other people, once they hit their percentage goals each month, they're done. So a lot of the big lot traders out there, a lot of them are probably done for the month by now, right? So volume is a little bit lower. Now, with that lower volume, you also got to remember too, there are lots of traders out there who are trying to make up for lost time, right? Imagine if you got killed at the beginning of this month and now you're trying the Hail Mary trades right now, trying to dig yourself out of the red. Towards the end of the month, we see this dangerous kind of cocktail of low volume combined with higher tolerance for risk, risky behavior, right? It's true. And it's not just in trading. At the end of the month, there's that sense of euphoria, if you had a good month, or that sense of frustration. And that leads to, right, that risk-taking mindset, which combine it together, you add lower volume with more risk-taking, and what do you get? volatility. And that's usually what we see the most at the end of the month is volatility. So tomorrow we're expecting to see some more of these sharp moves, big momentum swings. And on top of that tomorrow, it may not look like a lot on the chart. You'll notice there's not a lot of red star news tomorrow here in the U.S. Most of this is going to happen in the pre-market. And there's a lot going on this week, so I made myself a cheat sheet. Tomorrow, what's going on tomorrow here? Tomorrow, in the overnight session, I've got the PMIs out of China. So obviously, manufacturing indexes out of the world's manufacturing hub might just be an important news event. That's going to kick us off. That'll probably be somewhere between 2 o'clock and 3 o'clock a.m. Eastern time. So if you're trading the Asian session or into London, be aware. We may be walking into an absolute hurricane right after those PMIs come out overnight. Then on top of that, I believe it was France, Italy, I don't think I saw Germany in there. We have a lot of the European GDPs coming out. Again, this is the pre-market for us, but it's in the London session tomorrow as well, right? So 8 a.m., 8:30, 9 a.m., right? London time, obviously, right? That would be, right? That'd be obviously, right? Much earlier in the morning, right, for us here in the U.S. So pre-market, we've got the GDP reports coming out, right, this is the end of the first quarter, right, first quarter GDP, huge number, right, coming out tomorrow in Europe. And then after the close tomorrow, we'll hear from Apple, GE, GM, McDonald's. The reason why this matters is if you trade in a market like the Nasdaq with a symbol like Apple coming out tomorrow after the close, as you can imagine, Nasdaq might be a little bit subdued tomorrow, right? Like it was today until that Google news came out, right, and shot it lower here. So a lot going on this week, right? We'll talk more about Wednesday, Thursday, and Friday later on this week. We have enough, right? We're going to have big enough fish to fry tomorrow. So news from China, news from Europe, and then again, right, you look at our schedule tomorrow morning, our biggest problem is that we might come in tomorrow, right? None of this news is very important tomorrow. I mean, a little bit of that, right? A little bit of the home sales and PMI around 10 o'clock, but for the most part, it's not a very big important news report there. So I'm not expecting a lot of things inside the U.S. session. But our biggest thing tomorrow is going to be waiting until we see what happens in China, see what happens in Europe, and then dealing with, again, kind of the, almost like the aftermath of hurricane, right? We might come in and have this whole chart wiped to pieces, and we may have to put this together tomorrow morning, right, at the beginning of the day tomorrow. So be aware, be very careful if you're in Asia. Obviously, if you're in Europe, you'll be kind of picking up those pieces, right? And then we'll grab it as we go into the U.S. session. Once again, don't forget, we open up our trade room every morning, 8 o'clock Eastern time, and we trade the strategy together. Now, speaking of the strategy, the first thing I do as part of my 3-step strategy, which we trade every morning in our trade room, is I always ask myself, that's a bad joke, right? What type of day do we have here, right? Is it a range-bound day or a trending day? The markets are always different, but you can always fit them into one of two categories. The market's either going to be ranging or it's going to be trending. The trick is I always start every morning by looking for a range. And sure enough, that was exactly what we found at the beginning of the day. So once we saw that, we knew today was a range environment. And you'll notice what happened, right? Price goes down, right back into the range. Price goes up, right back into the range. Price goes, right? Price tries to do it again, back into the range now. So as of lunchtime, right? As of 11 o'clock, 12 o'clock here, right? Where the most amount of volume is traded, we're stuck inside that range. It wasn't until after 11 o'clock, when the volume started to dry up, oil gets pretty illiquid in the afternoon, we see a strong move up. And sure enough, anytime we see a strong move in one direction, we're going to probably see a second test of that high. So everything appears to make perfect sense. We start off as a range. The volume dries up in the afternoon. The buyers say, we're free, right? They run up, they try to buy the pullback. And now here we are at a critical junction. We have major levels of resistance here now because, again, I take that trading range. The size of that range gives me these levels of resistance, right? If I take that trading range, Copy and paste it up, copy and paste it up, copy and paste it up. Look where we are. Okay, now with that range, we also know we have one leg and two legs. So even if you didn't know there was a range there, you still have to look at this and say, okay, this is at the very least, this is a measured move. So we're definitely sitting at major resistance right now. We're certainly bullish with momentum, right? But we obviously are at major resistance. Now, I would go as far as to say, if you zoomed out here, careful. Oh boy, there she is. There we go. There's a little guy, right? That little guy down really could mean people are looking at this like a flag, right? So we really could be seeing a lot of traders right now looking at this as a flag, right? So we've got this little range right here, obviously, right? But they're looking at this as a flag too, right? So kind of think of it this way. This could also be seen here now, and again, it's not pretty, right? But you could also look at this as a flag. I don't think this is necessary, right? But that's how you could also look at it too. So you could look at this as a long-term bear flag. I've got this as a short-term trading range. It all pretty much tells us the same basic stuff, doesn't it, right? It all pretty much tells us that eventually, once this market gets high enough, sellers are probably going to sell it, right? With this big move down, right? Once this thing gets high enough, you'll see enough sellers in here to sell it right back down in. Now, knowing this, the buyers may be able to spoil the fun, right? They may be able to take this thing higher here, but we've really got to see some strength here for those buyers. So I don't think it's a good idea to be buying yet, right? I do realize if you just look at the chart right now, you would say we're bullish, but we might be bullish, but I think in the big picture right now and in the small picture says we're on top of the range, right? Big picture says, again, flag pattern, right? Selling back down to retest that low. So now we have an idea of what we're doing, right? We know we want to be a seller. We know we've got to be a little bit more patient to be a buyer. So how do we sell a market that feels so bullish? What's the trick? Because I would imagine a lot of buyers are probably going to be thinking this market's bullish. And if I was a buyer right now, if I was a buyer, I'd be thinking about buying right down here, right? Yeah. If I was a buyer, I would say, you know what? That's my channel. Okay, I'm going to buy that pullback, right? And that's definitely what, if I was a buyer, that's where I'd be buying. Or I'd be looking to buy as it goes, right, as it goes higher and pulls back. So what I want to do right now is, to be a seller, I'm going to look for those buyers to fail, honestly. Look at them fail. And to do that, what I like to do is I like to look for an area where I would anticipate buyers to come in, and then I like to sell into their stop losses, right? So for example, if we get a pullback going lower, that's going to get us below the moving average. Now, when we get below the moving average, what's going to happen is sellers are going to try to sell this thing, right? They will. They'll try to sell it off that moving average. Buyers will then try to buy into their failure, right? Like I preach all the time on this newsletter. But guess what? It's not a trending market. What I'm now waiting for is I'm waiting for that thing to fail. And I'm looking to sell right into that failure. This will be a trap pattern, right? Trap pattern, trap high. It'll also be kind of like a failed failure, right? If you're an experienced newsletter viewer, right, you know how much I love those failure patterns. In this case, though, I want to actually play that failure against, right, these buyers. I'm anticipating buyers will come in. I want to sell right into those stop losses. So that's the trick for me now, to sell off this high. Now, what if we don't get it, right? What if we don't get that? What if all we get is the market running lower? Then what do we do, right? What if I'm right? What if it just nosedives, right? Then what do we do? Then what we do is we wait for the buyer failure. What's going to happen is buyers will likely come in to buy this thing back up, right? They'll go, oh, great, buy the pullback, right? The buyers will buy that thing back up. Once they buy that back up, we find those buyers to buy off the moving average now. Now I can sell into their failure there again. Now that would not be a failed failure, right? That'd be a failure setup, okay? So one was a failed failure. I know it's a little bit complicated, right? But we'll talk more about that as we go. And the other one's a failure setup if we do get the drop going lower. Okay, now don't forget, if we do end up down here, then we'll use the 1, the 2 try failure pattern, right? 1, 2, and we'll buy it right back up again. So if we do end up down around these lows, don't try to sell down here. It's a range. You want to buy below the low of that range, right? Not trying to sell below low, right? Sell high, buy low. Now, what if we break higher? What's the plan if we break higher? Let me get rid of this channel here for a moment. What if we break higher here? If we break higher, there are basically 3 scenarios I'm watching for. You ready? Scenario 1 is a strong move up with a 1, 2 trap low. I call these 2 try breakouts. 1, 2. Okay, that's the aggressive one. It's called a 2 try breakout pattern. It's basically a trap setup. Okay, key here is strong move up, right? Strong move up. That's the trick. Okay, it's a little bit like this, right? Strong move up, 1, 2, trap and go, right? Kind of like that, right? So strong move up, bears try once, bears try twice, trap and go. Okay, 2 try breakout pattern. Next up would be a strong move higher, connect that high, find my channel, and we're buying off the low of that channel. Okay, see that pattern brewing in there? Nice big channel going higher. Remember, all of these require me to see another leg higher. Okay, got to see more strength. Third scenario, 1, 2, 3. Now we have a smaller channel. Mark up that high, that creates a sweet spot. Mark up that high, that creates the high of the hidden channel. Back down here now, off of those lows to find the hidden channel. There's your sweet spot. We talked about that last time, right, on the newsletter right there, right, for that buy. So 3 scenarios therefore would be a buyer, 2 scenarios coming off that high. Boy, oh boy, we covered a lot here so far, and this is only oil. I want to keep going, but so far we've talked about failed failures, failure patterns, traps, 2 try breakouts. Holy Christmas, that's a lot to learn. Here's something easier. How about a free trading course? In the upper right-hand corner, I know you guys want to learn as much as you can on this video. I want to keep going, right? And to give you a deeper dive, though, grab that free course in the upper right-hand corner. I'm going to put a big red button right below the video tonight on our trading blog. So whichever works best for you, grab the big button in the upper right-hand corner, grab the button below the video tonight on the blog here at Sideways Markets, and take that free trading course. Learn more about my trap patterns, failure patterns, even failed failure patterns, right, which are always very, very effective. Grab that free course. You will not be disappointed. In the meantime, though, let's keep moving. We have a lot more to cover here tonight. We are just getting this party started. Over on the S&P right now, S&P has a nice, big, strong run up. That strong run up, again, we're bullish now, right? No question about that. No ranges here, right? No ranges to worry about here. Strong move up, bull market. In a bull market, I want to buy at support. So where can I find a level of support? I've got 3 levels of support here I'm watching. 1, mark up that prior high. It's not the exact prior high. It's the top of that channel we had. Beginning of last week, right? This was that big Chinese news blowout. And then, of course, the fireworks from China that I believe, it wasn't GDP from China. What was it? I can't recall what it was. Beginning of last week. The bottom line, though, is that's the reversal line there, right? That area, what is that level here? Sorry, you can't see it, right? 29.38 and change. Don't worry about the exact number there, but 29.38, that's a key level of support. That's what I'm watching here right now. Now, don't forget, right? This is that big move up from that GDP report, right? So I'm looking at this as our key low. We go 1, 2, 3. This reminds me of the old Elliott wave, 5-wave sequence here, and we're looking to buy off the low of that channel. That's a key level of support, and you can see that lines up right around that 38 area, obviously, right? And then one last thing here is the spike in channel. Now, we got a couple spike in channels tonight to talk about. Spike in channel patterns, as you probably have already heard, just in case this is the first time you're watching this, anytime I see a spike like this, right, spike up and then into a channel, it's pretty easy. Go back and think about where's the first pullback and where's the base of that channel. So where does the base of the channel, hit the spike, right there? And then where's the first pullback? Right there, right? So this whole area right here now, that becomes, right, another major support zone. And sure enough, surprise, it's all in the same location. So we can definitely tell right now, we got a whole hell of a lot of buyers, right, are waiting for this thing, right, to pull back. I would also assume too, that because that low print this morning happened at 8 o'clock, I'll bet a lot of traders in the market that are used to trading the E-mini after 9:30, like most people do, they probably never got a chance to grab that low. So don't be surprised if we even dip a little bit lower, right, and go into it, just because buyers are probably waiting down here. You could also say too, there could also be a larger channel out here. You know, that larger channel could be there too. So there's a lot of good stuff down here, right? A lot of good stuff to watch out for. Now, I'm going to get rid of that spike in channel here for a moment, just to kind of clean things up here for us. So let's put this plan together here, right? I want to be a buyer. I don't want to sell this market, but here's the problem. The problem is this thing is looking very bearish as it goes lower, isn't it? Yeah, it definitely is. So there are basically, let's say, three different patterns I'm watching for. One is, right, I'm watching for a two-legged pullback, right? Watch for a shallow pullback and another leg lower. Draw that trend line over. Then I can use that trend line now as a key level of support for what we call a two-legged pullback, or a 2LP. Okay, that's going to be a little bit tricky because you're going to wait for the first leg, wait for the second leg, and then wait to get up and over, right, and buy it from there. What will be a whole lot easier here is if we finish off this move down, the bears go out, and what do? The bears come in, and the bears, of course, are thinking this market's going to collapse. They're thinking we're bearish. They don't know about the whole nest, right, of support levels that are sitting out down here, right? They know the market is bearish in the short term. So what do? They try to sell off that moving average, right? They sell the pullback. It might be as subtle as that one right there, right? Strong move down, sell off the moving average right back up, right? It might be as subtle as that little guy right there. A lot of times they look like this, right? Well, they'll come down, the bears try to sell, right? It's not much, right? But once you see those bears commit to that, now you know where their pain is, now you know where their stops are, and you can buy right into those stop losses. So that's the basic idea here, right? I now know where, as I always say, right, where the pain starts to settle in, right? We know where the pain is for the bears, and that becomes a great spot now for us. Once we see those sellers try to sell off that moving average, now we can look for that failure pattern. We're literally buying right into the pain point, into the stop losses of those sellers. Those are failure patterns, a seller failure pullback. And then, of course, speaking of pullback, the next pattern here, because you don't want to chase it higher here. You want to wait for that pullback. You'll be amazed how many times these markets will jump up, and then right when you think they're never coming back, what do? They pull right back for you. Right? So anytime we see that strong move, right, that strong move up, that pullback, that failure, and then up, over, and go from there, right? We're buying that failure, we're buying that pullback. So same thing here, right? Strong move down, moving average comes over, sellers think it's bearish, it's not bearish, right? We know we'd rather be on the buy side. We buy into their failure, grab that pullback, right, and we run back higher from there. So two-legged pullback, failure pattern, breakout pullback. Perfect. Now, what if we get stuck here? Because, honestly, this could, I was very hesitant to call this a range, but we may see it. You'll notice it's a little bit potential there for a range. If we happen to go sideways here, what do? If we happen to go sideways here tomorrow morning for whatever reason, if the market turns into a range right now, right? If it goes range bound, it's going to be pretty much a little bit more bullish, obviously, than bearish. So anytime I see a range bound market, what do we use? The two-try failure pattern. It's really quite simple. Let the bears try to go lower. Let them pull back. Let them try again. We call this the two-try failure, right? One try, to try. Let the bears try once, let them try twice, then we'll buy now, right, going back up to retest that high, right? Target, of course, back up to retest the major high and then up to that 52.25 all-time high. All right, guys? Now, how do we turn bearish? So now we've got everything pretty much planned here as far as the bulls go, right? How do we turn, all right, what if we turn bearish here? Or how do we turn bearish? Well, what do we need for a breakout? What do we need for the reversal? We talked about this a moment ago on oil, right? 1, 2, 3, reversal. What's the first one, right? What's number one? Number one is a strong move, right, against the trend. 2 is a pullback to the moving average. 3 is a run off the moving average. Remember, if that pullback fails, right, we're buying it on the way back up. So the second rule here is pull back to the moving average. Third out of that 1, 2, 3 reversal, right, is that strong move off. Now what do we do? Does that mean sell down here? No, we sell at resistance. We don't sell low, right? That's what rookies do. And you watch my newsletter, you are no longer a rookie, not anymore, right? Mark up that low, mark up that low. Now, back to those highs up there, right? Down off those highs, that's where your sweet spot is. And now we come in and we sell, right? We're going to sell that spot right at that prior swing low with the high of that channel. That's where we look for my failures, my traps, breakout pullbacks, etc., etc. And again, right, the objective at that point now, all the way back down to the pre-GDP number, right, on what, 2920, 2918 area, right? So buyers are trying to get back up and retest the high. Sellers are trying to get all the way back down to retest those lows. Will they get it done? Only time will tell. No matter what we have, though, right, we are ready for the action here tomorrow. Over on the Nasdaq. So Nasdaq started off pretty good, right? Nasdaq was obviously a bullish market today. Strong move up, right? Measured move from Friday. Remember, this is Friday's session back here, right? Last Friday, GDP comes out, big run higher. Obviously, right, a bull market. Now, I would assume a lot of people are going to draw off this high, right? Make that channel. The channel does fit pretty well. And then what is this? This is a spike in channel, right? Spike up into a channel. And we talked about this. Where's the best place, right? Where's the best place now? If I have a spike in channel here, right? Where's that buy zone? The buy zone is the deepest part of the pullback, right? Sorry, the first pullback and the base of the channel, right? The base of the channel and the first pullback. So this area right there, right? That's my buy zone. As you can see, we are a little bit below the buy zone, but that's okay. We're in the right area, okay? So we had a spike in channel there. I also think if it was me, I would call this a range. Strong move up, we go up, we pull back, we go up, we pull back, we go up. Yeah, that's a range. Double tops, double bottoms. I can count 2 tops, I can count 2 bottoms. That's a range. So anytime we see a trading range with a bullish bias to it, right? We had the opposite on the S&P. I take the size of that range, copy and paste it down, right? Copy and paste it down, right? Makes sense, right? Take the size of that range, find levels of support down here. This is the sweet spot, right? That's the buy zone now for a range-bound market, right? That's the buy zone for a range-bound market. So with that range-bound market, I've got my buy zone ready to go. I know now the odds are pretty good. We're going to get a back up into that range. The only problem is that's one hell of a move lower, right? That is not to be messed with. Okay, now what typically happens when you see a market make this much move lower, right, is everybody starts thinking, you know, where's that 382? Where's that 50%, right? Let's sell there, right? Everybody starts measuring out their fibs. I'm not a big fan of fibs, by the way, right? I don't use Fibonacci in my trading, but I know a lot of rookies do. I know a lot of traders who haven't quite turned the corner. They rely, right, on Fibonacci. Dare I say, right, the weak hands in the market usually rely only on Fibonacci and moving average crosses and, you know, simple strategies like that, right? Just buying every 61, 1-8 pullback. So, you know, stuff you learn in, like, you know, the beginner trading books, things like that. Those strategies don't work in complex markets. They will enough to keep you hunting for them, but I think anybody with any experience knows that if you just go out and buy pullbacks to the 382 or the 50 or 61.8, you're probably not going to have a very long career. You've got to learn how to filter those in the right market conditions. So again, knowing that we have a strong move up into a trading range, seeing this thing go up and then collapse into what we have to assume are earnings reports this afternoon. It happened right at the end of the day. We know now that sellers, right, are going to try to sell this pullback. I also know that buyers are likely looking at this going, holy Christmas, this is a bargain, right? This is a bargain. Buy it while you can, right? Get it while you can. So we want to be a buyer down here. We're in a great location, but we got too much bearishness. Now, whenever I see a real strong move like this, I know the odds are pretty good. We're going to go up, over, get a second leg. And then from there, right, do we go up, over, and then over? Or do we get the follow through into a new channel? So there are ultimately three scenarios I'm getting ready for right now. Ready? Let's go over them together. The first one is what we call a nested failure pattern. Okay, this one's a little bit tricky. Okay, but you'll kind of see what happened back here, right? As the market goes lower, right? As the market goes lower, look what happens. Bears try once at the moving average, they try twice, and then the market shoots up. That's ultimately what you're looking to do on this move. We go lower, moving average comes back. You're expecting now the bears to try once, bears to try twice. I would kind of err on the side of caution that sellers are going to probably try a couple times to finish off that move, right? And again, since a lot of traders will say, 382, 50%, right? You want to kind of anticipate those. And again, do not take this personally, but the quote-unquote weak hands in the market, right? People who are not really moving these markets, they're leaving their orders at 382, halfway, 61.8 stuff, right? So once I see them sell once I see them sell twice, now I know what the stops are, and now I can buy right into those stops, right? Make sense? So that's the first one. That one's called a nested failure pattern. It's a great pattern when you want to be a buyer, but that momentum is just so darn strong that you got to think the bears are going to give it a couple swings. What's the second scenario for being a buyer? Well, anytime we see a strong move down, we've got to expect we're going to see some sort of second leg. So imagine now we pull back, the bears try to run it, but they don't keep going, right? They don't keep going. Now we know where stops are, and now we look for that buy now, right? Again, we hold that low. We see what's called rejection off that low, and now we've got that one leg. Let those bears take it lower, and then we know where stops are. We know where pain is, and we're buying into that failure, okay? Very subtle difference there, right? The first one was they're not getting that second leg, right? But they'll try twice to do it, 1, 2, and back up. Second scenario is they actually get that second leg. Then now the bears got their kind of cherry on top. They got their job done, but they didn't completely blow through it. We can then run back up. Or third scenario is they do run. Right? We do get the 1, 2, 3 breakout. We do get that run, and we do get the run now. Now it's find that low, up at the top there, right? Find that high, and then we're selling off that high here. And oftentimes, right, those sell patterns up here are going to be buyer failures, right, into pullbacks, things like that, right? So imagine now, right, that is kind of right there, right? Buyer failure, right, into pullback, right? Look at that Picasso I've got going on here. My buddy Bobby Ross will be really proud of my skills on this drawing tool. All right, hope you guys saw that. Now, that covers buy side, right? That covers sell side. All right, I think we're good to go here in the Nasdaq. Over now to the gold here, the yellow metal on the gold. Gold is bearish, right? Gold is bearish, no doubt about that. Big move down, right? They got that leg. What was pretty interesting here is that there was earlier on, right, a much earlier, right, kind of hidden channel there, right? Bottom line, though, is now we know we're bearish. I want to sell at resistance. Right? We know we're bearish. I want to sell at resistance. Now, knowing that I want to sell at resistance, I'm going to line up, right? I learned a long time ago that the most effective way to find levels of resistance was to actually look first for levels of support. Yeah, kind of a counterintuitive way to do it, right? So 1, 2, 3, draw off those lows, up to those highs, and it's pretty easy to see, right? If you were to put a midline on here, go in there and put a little midline on there, right? That midline is always a good, right, kind of a good confirmation. You can see that midline right there, right, acting as support, resistance, right? Okay, so we know that channel looks good. That gives me a level of support overhead. That looks great, right? Then, of course, you'll notice we finished up the day today inside of a range. This is a bear bias to it. Now, we talked about this on the Nasdaq, right? We talked about this in a range-bound market. What's the plan for a range-bound market? What's the right pattern? A two-try failure, right? So two-try failure, up, 1, 2, and back down. And where do we look for that pattern again? We take that pattern off of the range expansion areas, right? The size of that trading range is very small, I know. Size of the range is the size of those expansions overhead, right? So it's 1, it's 2, it's 3. And because that range is so narrow like this, you got to think they're going to get out to that third one, right? That third one usually be the most reactive one because it's such a small, narrow range. We'll talk more about that in that free course I mentioned earlier on in tonight's video. The bottom line, though, is we know we're bearish, and now we have the combination of the high of that channel along with that sell zone for that trading range. On top of this, you'll notice here also, too, we have this sneaky little range we're looking at right now in the long term. This goes back to last Thursday's trading session. Then obviously on Friday, we had that big jump up for whatever reason, right? That GDP number that came out, which apparently they read wrong because it was a rock star number. And of course, you can see they read it wrong and it came right back down again. The amount of the move, right? The amount of the move above the range is the amount of the move below the range. And that puts us down around that 72.4. Now, if you've watched my newsletter every evening, you know these pendulum swings are pretty darn reliable, right? They may not tell us when, but they tell us where. And so we have to admit, right, that pendulum swing looks pretty darn convenient down here for a big target. Maybe not tomorrow, maybe not on Wednesday, but later on this week. At some point, I would imagine, unless we see some dramatic change in personality, we may see that big pendulum swing all the way down to that 72.4. So make sure you mark that for your big targets here, right, for your runners. And of course, with that trading range, right? What do we do with a range like this? We buy low, we sell high, right? We buy low, we sell high. So I think there's some great money to make right now selling high, right? Buying low. And again, right? Stay out of the middle, right? Stay out of that middle, right? Stay away from that middle. So avoid the middle, buy low, right? And sell high. So you can see how that big range really kind of puts us in a good spot here. Everything kind of jives here, right? I got levels of resistance, top of the range, levels of resistance, range expansion. I got top of that channel. So now I know where we're trying to go. What's the setup we want to see? You can almost already see a trend line coming up here, right? So if I have a trend line coming up and we jump up, I want to use that trend line now as that level of support. At the very least, though, I want to go up. Let the buyers try to buy the pullback. We call these what? 1 try, 2 try, and then failure back down into that trading range, right? How about the opposite side? How would we buy low? It's a bear market. What's the best way, right? What's the best way to buy in a bear market? Well, first of all, make sure you know where they're trying to go, right? Make sure you get down into this battle zone here, 1278, 1279 area. If we can get that strong run down, what pattern was it called again? We just saw this in the Nasdaq, right? It was the nested, the 1, the 2, and the buy back up. Because remember, right, it's bearish. So sellers will try once, the bears will try twice. Yeah, they're probably not going to just try once, right? They'll probably try twice before they give up. You know, good example back here, right? Strong move up, buyers try once, buyers try twice, then the party starts, right? Then it falls apart. It rarely will go straight up, straight back down. And the problem is that there's a good chance when it does go up like that, it'll retest those highs before it makes that run lower. So when you see a bull market like that, 1, 2, sell back down, right? Opposite, of course, is true on the way back higher, right? We go down, we look for 1, 2, and then back up we go from there. So we're selling high, we're buying low. By the way, what would a breakout look like? Breakout, 1, 2, 3, reversal? Yes. 1, strong move up. 2, pull back to the moving average. You got it. 3, strong move off. Don't be trying to buy that first pullback because you know what's going to happen, right? You buy that, it'll fail on you. Okay, trust me, the ones you don't, right? The ones you don't trade are the ones that work. The ones you do are the ones that don't, right? That's the way it always goes, isn't it? So don't try to buy that pullback because it'll fail on you, right? I know, it's frustrating, but it will. Mark up that high. That creates the high, right, off that prior swing. Mark up that high and then down those lows, right? Find that hidden channel, and we're buying off that hidden channel. And again, that hidden channel will probably be a 1, 2 failure, right, into pullback, right? So think about the pattern will probably look like that, right? That'll be kind of what the pattern looks like there. Okay, so as it pulls back to that channel, it'll be a little failure pattern into a pullback pattern, right, as we go. All right, guys, got the gold all ready to go here for tomorrow. How about some euro? Wrapping up right now on the euro. The euro is basically in the same situation as oil right now, right? It is. It's an overall bear trend. In fact, it's more than an overall bear trend. It's like a perma bear trend right now. Very, very bearish right now on that euro. And it's not just a bear trend for a week or two. We've got some fundamental stuff right now pushing the dollar higher and that dollar going higher. Remember, the dollar index is a basket of currencies. The biggest percentage of that basket are euros. So when the dollar goes up, the euro has to go down. It's kind of the way it has to be, right? When the euro goes, when the dollar goes right lower, the euro will go higher. So, and of course, I get a lot of questions about that. You know, why don't I do dollar analysis on this video newsletter, right? I get a lot of questions like that. Why don't I do dollar analysis? Because direction's not the problem, right? The one thing that dollar correlations don't tell you is entries and exits, right? A lot of people tell me, well, why not just find support on the dollar and use that as resistance on the euro? And it makes sense in theory, but in reality, I still have to go qualify the trade in the euro, right? It's trade account suicide for you to say, well, look, Joe, the dollar's at support, so you should then sell the euro. I mean, I wish it was that simple, right? But don't be so naive, right? Just because the dollar is sitting at support doesn't mean the resistance is now on the euro and I should sell now. You still have to go qualify that euro trade. Right, you can use the dollar correlation as an extra add-on, as an extra confidence booster. But, you know, like I mentioned earlier, it's like Fibonacci, right? If you can't use it on its own, why are you using it, right? If you can't trust it on its own, I don't think you should waste your time doing it all. So for me, I keep it as simple as possible. Yeah, I could go out and talk about, well, the dollar's up and the euro's down and blah, 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 and make it sound like I'm a smart guy, right? But in all reality, right, I'd be lying to you. You can't use that correlation to actually pull the trigger, at least not in a safe way, right? Okay, off my soapbox. So now you know, right? You're never going to see me talk about dollar-euro correlation, right? I have in the past, but the reality is it's not going to qualify the trade on the euro. It doesn't tell me timing, getting in, getting out. It's one of those kind of vanity correlations. It's like everybody says, well, the dollar's up. Well, good for the dollar. Anyways, bottom line is euro's down. Euro's down right now because dollar's up. Dollar's up right now because of all these trade talks and all the stuff going on right now right around the world. So we're not quite ready to call this a bull market yet, right? It does look like we have a bullishness to this market right now, but it makes sense, right? Strong move down into a trading range. Okay, this is a very sneaky range, wasn't it? It was a very sneaky range last week. That was the range right there. And if you watch my newsletter every evening, you were there with me last week, you probably laughed at that range, but look what happened. Right back into it again. Right back into it again. And sure enough, right? Sure enough, there's that 1, there's that 2, right back in. And we're expecting to see the same thing. 1, 2, and back down in we go, right? Back down in we go. So I want to be a seller. I've got some targets though. I'm hoping we get those targets filled in the short term here. The amount of the move below the range is the amount of the move above the range. So I'm anticipating this area around 12,500 up there. I could also see one leg, two leg. That gives me a measured move. On top of that, the last big leg lower we saw, we're right there right now, right? That is a major level of, you guessed it, right, of resistance. So that's a key level there. So in all honesty, this whole area up here could be seen as one big resistance zone. Now, I want to sell this market, but obviously we're pretty darn bullish, and it looks like we have a little bit more space to go here. So what are a couple of ways that I could sell this market? First of all, how do we sell a bull market? Right? Very carefully, he says. No, how do we sell a bull market? We have resistance up here, right? And we're not just selling a bull market. We're selling a range-bound market that's moving higher. Make that very, very clear, right? I would never recommend selling a bull market just because we have a level of resistance. Okay, so make that very clear. It's a range-bound market, and because of that, we're trying to sell back into that range. The problem is it's bullish momentum. So knowing the market is bullish right now, what are some options for me? We just talked about this over on the gold, right? One would be we go up, buyers try once, buyers try twice, back down in, right? Buyers try once, buyers try twice, we sell into those stops. And again, we do that because we know that momentum tells us what? We're going to probably see a second leg. Second scenario, we see that second leg. Now we know where stops are, right? And we're selling into those stops. Now that could also kind of manifest into a 1-2 failure from there. So you could easily combine, right? What is a 2-try failure, a major 2-try, 1 and 2, with a little nested 2-try. Right? So we'll be watching that tomorrow on our faster time frames. But if they do get that pullback, you've got to think they're going to try to buy the pullback. We know where stops are, and we're selling into those stops. Okay, what else can we do here? If we end up back inside that range again, right? If we end up back inside that range, back down to the opposite side, what do? 1, 2, buy it back up, right? 1, 2, buy it back up. Buy low, sell high, avoid the middle. Right? So 1, 2, nested back down. Honestly, though, with this much momentum going higher, I would expect them to finish off that leg. Then we can look for, right, once we get those buyers buying the pullback right into resistance, then we'll start looking for that sell back down in. And then again, if we can get back to that low, 1, 2, and back up from there. Now, how would this market really prove its bullishness? You got it. 1, 2, 3. Right? Breakout. Mark up those highs, mark up that low, and now we're buying, right? We're buying off of that low, right? Buying off of that new hidden channel. All right, guys? So right now, we're just waiting patiently to see what we get, right? Do we get the market a 1, 2, 3 breakout? Are we buying that pullback now as we make a run back to 13,000? Or will we go up, pull back, and go and sell into their stops? Or will we go up, 1, 2, back down we go, right? And then again, stay out of that middle, get 1, get 2, and then back up, right? 1, 2, and then back up. Buy off the low of that range, right? Buy low, sell high, avoid that middle, and by all means, guys, don't forget tomorrow, lots of news, right? There's a ton of news coming out, whether it's China, whether it's Europe, right? Tomorrow morning, not much in the U.S. session, but we might be digging our way out of the rubble tomorrow morning by the time we get to the U.S. session. So get there early. We'll prep this stuff up tomorrow morning, 8 o'clock Eastern time. We open up our trade room every morning, Monday through Friday, and I want to see you there with me. It's easy to get started. Right below me tonight on the video, you'll see a big button for the advanced course. Our advanced classes include our beginner, intermediate and advanced classes. The advanced course includes all the software, all access to our trade room. The best part is you can register right below my ugly mug and get ready for tomorrow morning. If you're not ready for membership yet, right to the left of my ugly mug, you'll see that free trial button right here. Grab that free trial. As part of that free trial, you'll get the free trading course, the free pass to attend our trade room, and you'll see hundreds of examples of daily chart lessons right from our trade room. Grab the free trial or pull the trigger and come join me tomorrow morning as a brand new member. And as always, if you have any questions, call that toll-free phone number to my left, right? Use that live support button right below me tonight. And I'll see you guys. If not tomorrow morning, I'll see you same time tomorrow night on our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time, all right? We'll see you guys later. Bye-bye for now.